What's up, Bitcoiners? Hello, and welcome back to your economic calendar, the information you need for the week ahead in Bitcoin. As always, I'm Mauricio Di Bartolomeo here at Ledn, and today is Wednesday, February 15th. We have a great show for you today. In today's commentary, we're going to look at first some data within the Bitcoin network that shows that the honey badger does not care about the headlines and it has just kept going. We're also going to look at a piece of news around stablecoins that came out relatively under the radar, which was that JP Morgan put out a release or a report that suggests that US banks may be looking to get a slice of the stablecoin pie. And last but not least, we're going to check in back with Nigeria, where a recent change by the central bank has wreaked chaos in the local economy, and we're looking at how Bitcoin continues to trade locally. We also have Bitcoin option expirations day on Friday and a few other market moving news and events that could impact Bitcoin. As always, we cover that in the calendar section at the end. So grab your coffees. It's going to be a great one. And as always, before we start with today's analysis, let's check in on Bitcoin's price performance for last week. We see that last week, Bitcoin dropped by an even 5%, closing at 21,789. However, we see that it has rebounded so far this week and made up basically almost all of the loss from last week, up 4.56% at the time of recording this video. And that is on the back of a positive reaction to yesterday's inflation number in the US. We note that there has still been a very slight increase. Let's go back to the daily here, and as part of our technical commentary, and let's pop up the moving averages here. So an interesting note that we wanted to highlight here is that despite the recent move in price that we have seen on Bitcoin over the last few weeks, the buildup in short interest still remains very, very low relative to historics. And the levels, again, they are near the historical lows, and this is the short interest on the Bitfinex platform, which tends to be a good benchmark to overall short interest in the markets. Now, again, the lack of buildup in short interest suggests that investors may be seeing limited downside from these levels, which is healthy and also consistent with the shape of the Bitcoin futures contracts. And here is that for your reference. Now, as you can see, according to the futures chart, investors expect Bitcoin to trade progressively higher in terms of price as it goes further into the future. And for context, here is the June delivery contract for Binance, which is trading at 23,242, well in excess of the current 22,785 that we're seeing on spot. So in terms of key support and resistance levels, let's check in on let's just go back to the Bitcoin chart on the daily. And we see here that one second, let me just fix this chart. So in terms of key resistance and support levels, we continue to watch the 200-week moving average as potential resistance to the upside. That is sitting currently at 24,915, so roughly $25,000. And in terms of support to the downside, we are watching the 200-day moving average, which is this orange line here, and it is currently sitting at 19,700, so very close to that historical 20,000 highs from the 2017 cycle, which has served as an important support and resistance level for Bitcoin historically, going back to those dates. Now, remember that this Friday we have Bitcoin options expiration day, and this is a monthly expiration for the month of February. So remember, keep this in mind, as it typically adds volatility to markets, so we may see a volatile trading session on Friday. And as I mentioned at the start, in today's analysis, we're going to look at some network data for Bitcoin that suggests that the honey badger does not care about the recent headlines, and it has kept going. For that, we're going to pop up a chart shortly. Second, we're going to talk about stablecoins and US banks and the recent JP Morgan report from last week, and what that may mean for stablecoins going forward. And third, we're going to talk about Nigeria, where again, the big change from the central bank has caused chaos locally, and the Supreme Court of Nigeria actually had to step in last week to prevent even further chaos. So we're going to talk about that and how Bitcoin is helping. So let's start with the honey badger data. For that, let's pop up a chart. And the point we want to make here is that despite the recent headlines, the recent headlines around Bitcoin and crypto would have you think that Bitcoin adoption should be slowing. But the numbers say the complete opposite. The number of addresses holding balances from 0.001 Bitcoin to zero point 0.1 Bitcoin have all been rising over the last few months, and that's the chart that you have on your screen right now. And as you can see, all three lines extend upwards and to the right. So this chart basically speaks for itself. These lines have had basically very little impact. By looking at these charts, you could not tell effectively what has been happening in the crypto markets because they seem to be going up in a steady fashion. Now, as the data shows, there are now over 22 million addresses holding balances over 0.001 Bitcoin. There are over 11.5 million addresses holding balances of 0.01. So just to give you a sense, the red line is the equivalent balance of $20, the green line is the equivalent balance of $200, and the blue line is addresses holding an equivalent balance of $2,000 at the current prices. So again, you see all of these lines kept going upwards and to the right. And the lesson here is that we must not let the headlines fool us. While some parts of the world are debating one aspect of Bitcoin, an entirely different part of the world is using it to solve their own problems. Whether this is yesterday's Venezuela or Zimbabwe or today's Argentina or Nigeria, there will always be a country where money is breaking. Finding Bitcoin and stablecoins in these circumstances is a one-way door. You do not go back to fiat by choice. This is and will continue to be the case. And the second point we're going to cover today is the report last week from JP Morgan, which suggests that US banks may be looking to get a slice of the stablecoin pie. And that is the article referenced on your screen right now. And this piece of news flew somewhat under the radar last week when JP Morgan released what they deem Project Onyx. And Project Onyx is a white paper which they titled Deposit Tokens, a Foundation for a Stable Digital Money. And again, this is all on the headline on your screen, but you can also see it on the PDF, which is effectively, this is the white paper that they published, and you can find it if you Google Onyx JP Morgan. We'll get into this design consideration later, as we're going to talk a little bit about this today. Going back to the Bloomberg headline for your reference. Now, the way that the tokens are described in this report could be best described as a bank-compatible stablecoin. And that is a stablecoin that can be withdrawn and or deposited to an existing or compatible bank account. Now, again, I'll show you here how this design, how they highlight the design potentially of these deposit tokens, how they would be minted and redeemed. And under this proposed models, banks, US banks at that, would effectively be the minters, the ones that hold, and the ones that can redeem these deposit tokens for dollars and vice versa. And this could be interpreted as banks wanting to be the sole issuers and controllers of all stablecoins. Now, while Project Onyx seems simple, we know that banks are not famous for moving fast. So while this seems like a small initiative that is so far contained just to JP Morgan at the moment, we will continue to track its progress and see how the conversation develops around this idea. And the third point that we're going to talk about today is what is happening in Nigeria. As we have been covering here now for several weeks, the Nigerian central bank unleashed chaos when it effectively overnight decided to redesign its entire banknote system and basically significantly limit the availability of cash, and it is trying to drive people to the digital naira. That move has been met with tremendous backlash from society. We're going to get into that in a second. So again, you know, the title of this topic was called Crisis of Cash in Nigeria. And we want to cover basically how things have gone from bad to worse in Nigeria after the government's decision to redesign the local currency. The Supreme Court had to suspend and extend the deadline to invalidate old banknotes, which was set for last Friday. And the country was in such a chaotic state that the Supreme Court had to step in to essentially invalidate the deadline that had been set by the central bank. Now, people are protesting outside banks, sleeping in front of ATMs to be the first ones to withdraw cash once the cash gets replenished into the ATM. I lived through a very similar experience in Venezuela, and the level of anxiety that people experienced could only be described as agony. Beyond the people with their money trapped in their bank accounts, 40% of the country doesn't even have a bank account, and they rely on cash for their livelihood. cash that is not being injected into the system. Search interest for Bitcoin remains at historic highs in the main cities. And as we've said before, this is Bitcoin's time to shine. We hope that more Nigerians are able to find the solutions to their problems in Bitcoin and stablecoins, and we'll continue to report as this situation develops. All right, and before we get into what is ahead for the week, we wanted to let you know that we have started tweeting this weekly calendar of news and events on Mondays, and this will be published from the @HODL Twitter account. So you'll be able to catch this calendars now on Monday when the week is beginning, and we'll continue to provide these commentary updates and blogs on the Wednesdays. So now, and we're also going to cover the weekly calendar on the Wednesdays, but it'll be available to you for review on Mondays. So now let's get into what is in this week. So looking at the week ahead, we will get the January producer price index data for the US on Thursday, that's tomorrow. And this could be a leading indicator for consumer price inflation or consumer price indexes or inflation. And this is why this number is important and the Fed pays attention to it. We also have some relevant earnings left in the week in the likes of Shopify, Roblox, and DraftKings. And importantly, we have Bitcoin options expiration day on Friday. Keep an eye out for Friday as expiration days tend to add volatility. And so you can catch the full summary and details on the calendar on your screen for the days that are remaining in the week. So today, keep an eye out for earnings from Roblox, Shopify. Tomorrow, we get producer price index in the US. We also get one Fed speech from Lisa Cook. Earnings from DraftKings. We also get another read at US unemployment. And on Friday, importantly, again, we have option expirations day. So watch out for some volatility. With that, we have reached the end of today's show. If you liked it, if you enjoyed it, I welcome you to like it, subscribe to our channel, share it with your friends. And if you don't yet have a Ledn account, I welcome you to check us out at ledn.io and learn how we can offer you the world's industry leading and world's best Bitcoin-backed loans, as well as our savings accounts and B2X loans. So thank you very much. Thanks again for watching and see you next week. Take care.